Real estate or stocks? Let's dive right into what actually builds true wealth. Most folks think this is totally settled. They're convinced their favorite investment is the undisputed champ. But hey, what if both sides are completely missing the big picture? Scroll online and it's all luxury homes versus giant stock portfolios. Pure flex, right? The problem is, we're comparing hyped up stories instead of the actual undeniable math. Let's try an experiment. Imagine two identical friends, both starting with exactly 50 grand. Same exact age, same exact income, a pure, perfect, apples to apples baseline. Friend A buys a rental property while friend B goes all in on stocks. Fast forward 20 years. How does their wealth actually stack up over time? So who ends up richer? Forget luck or hard work. Who mathematically wins? Well, jumping to a quick answer right now is actually a huge mistake. Because the real answer depends on one massive, hidden factor that nobody talks about. Two people can buy the exact same asset and get totally different results. Wild, right? People get so emotional because they're arguing over personal stories, not the actual math. So, for this explainer, we're tossing out the hype, the gurus, and the feelings. We are focusing strictly on the cold, hard numbers, literally nothing else. And I promise this real math will completely change how you view building wealth. So, I leave you with this. What do you think that hidden factor actually is?
Drop best investment in a room full of investors and boom, watch the absolute chaos unfold.
That single question instantly splits the room into two fiercely loyal, deeply entrenched camps. Yep, welcome to the ultimate tribal divide. It's Team Real Estate versus Team Stock Market. Team Real Estate swears property creates the most millionaires, and honestly, their opening pitch is incredibly convincing. You just buy property, collect rent, and watch value soar, while tenants literally pay your mortgage. But wait, Team Stock Market jumps in, arguing that toilets and tenants make life way too complicated. Their counter is beautifully simple. Buy an index fund, wait, and enjoy absolutely zero maintenance. Here's the plot twist though. Both sides have massive success stories, so there's no obvious, immediate winner. So people fall into this huge trap. They blindly pick a side and spend decades aggressively defending it. But here's the massive flaw. Most of us aren't actually comparing investments. We're just comparing stories. These stories hide massive, unfair variables like perfect timing, lucky economic booms, and totally hidden mistakes. So before we even look at returns or declare a winner, we absolutely need strict, objective rules. Which leaves us with $1 million question. What exactly are the rules for a truly fair comparison? Today, we're finally settling the ultimate showdown, real estate versus the stock market. You know, hearing friends brag about overnight property booms or exploding stock portfolios gets kind of exhausting, right? Comparing those cherry-picked success stories isn't just super frustrating, it's honestly a completely flawed way to invest. So, to find the actual truth, we need strict rules of engagement to strip away all biases. Rule 1. Both of our hypothetical investors step into the ring with exactly $50,000. Investor 1 dumps that into a rental property, while Investor 2 drops it into stock index funds. Rule 2. They both start at the exact same moment, completely eliminating any lucky market timing. Rule 3. Both investments are locked in for a strict 20-year timeline. Absolutely no early exits allowed. This proves a crucial point. True wealth isn't some get-rich-quick sprint. It's literally a decades-long marathon. But wait a second. Are we really just measuring who ends up with the biggest cash pile? No way. True success requires our 5-category scoreboard: total wealth, cash flow, risk, effort, and ultimate flexibility. Think about it. Is slightly more money really worth decades of endless stress and zero flexibility? So when you weigh all 5 categories against your own personal goals, which investment actually wins? Imagine walking into a dealership and buying a $250,000 car with just 50 grand. Sounds absolutely impossible, right? Well, in real estate, that's exactly what financial leverage lets you do. With stocks, 50 grand buys 50 grand. But in real estate, it's just your down payment. Suddenly, that exact same 50,000 lets you control a massive $250,000 property. Now watch this. The real magic kicks in if that property goes up just 5%. 5% of the whole property is $12,500. That's a 25% return. The crazy part? You grabbed all that extra cash using only 50 grand of your own money. That right there is the magic of leverage.
Your gains on the entire asset totally skyrocket.
Honestly, those supercharged gains are exactly why real estate investors are completely obsessed with using leverage.
But wait, let's talk about the downside. Every superhero has their kryptonite, right?
Here's the catch nobody talks about. If the market tanks, this exact same principle still applies. The exact same force that feels like a cheat code, yeah, it magnifies your losses too. You really have to weigh the thrill of fast money against the harsh reality of bigger risks. So, I'll leave you with this. Are you genuinely ready to handle the downside of the cheat code? Let's bust a huge myth, the illusion of totally passive, easy money in real estate. Influencers love flashing cash online, right? But they conveniently leave out the brutal expenses nobody puts in the thumbnail. You expect this nice, steady stream of rent. Reality, it's more like a broken pipe just gushing cash out. Sure, the rent hits your account. Everything feels great. Then, boom, hidden costs show up to crush those profits. First up, property taxes. The government always gets theirs. Then add in those hefty insurance premiums. The leaking starts. And you know it, eventually, something breaks. Maintenance isn't optional, guys. It is a massive drain on your reserves. Oh, and vacancy. If that house sits empty, your bills keep coming, but your income? Literally $0. Think you'll just hire a property manager? Well, they don't work for free. They're taking a massive cut. All these bills just pile up like a heavy anchor, dragging those exciting initial returns right back to earth. So, gross income. Honestly, it's just a vanity metric. Your actual net profit is the only thing that matters. Rookies only see the upside. They get totally blindsided by the drag. All those silent, inevitable, hidden expenses adding up. It's exhausting, right? It really makes you wonder, is there a better, lower maintenance way to actually build your wealth? Enter the stock market. It's quietly doing something very different. Could this be the powerful alternative you've been missing?
Real estate looks like an absolutely unbeatable wealth building tool right now. It's the undisputed reigning champion. With insane leverage, steady rental income, and property appreciation, the housing market advantage feels almost totally unfair. But wait, the stock market quietly enters the ring to compete against all those flashy properties. It's a huge contrast. No physical buildings, no demanding tenants, just pure, easily scalable numbers. Because it lacks that physical flashiness, folks constantly underestimate the sheer, undeniable power of index funds. Let's face it, they're widely viewed as dull. Honestly, they're extremely boring investments. But here is the crazy truth. In the investing world, boring is usually where the real money's made. You just bypass picking single stocks, instantly owning hundreds of top companies all at the exact same time. It's a simple chain reaction. People buy stuff, businesses expand, profits skyrocket, and boom, you benefit directly. Moving past the hype, let's peek under the hood at the actual mathematical engine driving this growth. It's compounding, that relentless, magical mechanism that literally multiplies your wealth year after year after year. You're earning returns on top of returns, creating massive snowballing wealth over long periods of time. Plus, you completely dodge those landlord headaches. No midnight water heater panics, no surprise repairs, zero tenant drama. Obviously, markets aren't risk-free. Prices will absolutely go up and down dramatically along the ride. But over decades, the ultimate advantage index funds hold over real estate is their absolute, dead simple nature. Investors win big because simple systems are way easier to actually stick with over the long haul. So, while totally unglamorous, time and compounding make index funds a real heavyweight contender for building wealth. Which leaves us wondering, over 20 years, who actually ends up with the bigger pile of wealth? Today, we've got the ultimate 20-year financial showdown, real estate versus stocks. So, who actually builds more wealth over 2 decades? Let's finally settle this debate once and for all. Picture 2 identical investors, right? Both are starting out with exactly $50,000 in cash. They lock in their strategies and literally don't touch a thing for 20 full years. Investor 1 buys a solid rental property, while Investor 2 goes all in on index funds. Now, real estate feels unstoppable early on. Property values rise, rent flows in, and that mortgage shrinks. Year after year, this forced equity creation is exactly how real estate generates some seriously huge wealth. But while the landlord's out plunging toilets, the stock investor just relaxes as their portfolio quietly compounds. In that relentless, automatic compounding, it allows the index fund to just quietly catch up over time. So, who actually wins? Well, it hinges entirely on one incredibly crucial, kind of hidden assumption. The growth rate. This is the record scratch moment that dictates exactly how fast your money multiplies. If property values spike, leverage, using borrowed money, totally magnifies those gains, rocketing real estate ahead. But hey, with strong market returns and consistent reinvestment, index funds can easily overtake that property. Here's the crazy truth most people miss. There simply isn't one single guaranteed winner here. Different economic environments perfectly favor different investments. It all depends on the exact historical scenario you're in. So, cherry-picking isolated success stories to back up your favorite side, that's a dangerous financial trap. Math is the ultimate judge. It only cares about hard assumptions, not our biased human opinions. But wait, before you pick a side based purely on wealth, there's one final massive element. Risk. It changes absolutely everything. So, which side of the risk equation do you want to live on?
The hidden realities of investment risk. Seriously, forget just chasing those highest returns.
When starting out, most folks obsess over the exact wrong question: which investment makes more money?
Wealthy investors actually flip the script. They ask a totally counterintuitive question. What could actually go wrong? See, returns only tell half the story. Unmanaged risk, it can literally wipe out years of hard-earned gains. Take stocks, for example. Market volatility means your portfolio can plummet brutally fast. It's going to test your nerves.
Without selling a single share, thousands of dollars can seemingly just vaporize from your account overnight.
Now, real estate feels tangible, right? But it brings entirely different hidden risks that rarely make the headlines.
If a tenant moves out, your income stream instantly stops cold. But hey, those mortgage bills keep coming. Then there's sudden capital expenditures. A blown HVAC or ruined roof demands massive, totally unexpected cash payments. Which brings us to liquidity. It's a boring financial concept until you desperately need fast cash, right? Stocks offer instant liquidity with just one click. But liquidating physical property, that's a notoriously slow beast. Finding buyers, navigating mountains of paperwork, and closing the deal can lock up your capital for months. But the ultimate unmeasurable risk is your own mental stress. It's completely ignored by traditional financial spreadsheets.
Some sleep soundly through sudden market crashes. Others, they agonize over midnight plumbing calls from angry tenants.
So the real secret is self-awareness. You got to choose an asset class you can stick with for 20 years. That 20-year horizon changes everything. The highest theoretical return rarely survives if you just panic and sell early. So knowing your true tolerance for financial volatility and personal hassle, which path will you actually survive?
Let's explore a massive paradigm shift in building wealth: stocks versus real estate. What if some of the world's wealthiest investors have literally never owned a single rental property? Yup, no fixing leaky roofs, no screening tenants. They totally skipped those traditional physical headaches. See, real estate is often a complex maze. Stocks, they're basically a straight, super simple highway. You get massive scale instantly. With just a few clicks, you're invested in hundreds of companies. That means no endless property hunting, no stressful negotiations, and zero closing paperwork. Talk about saving time. Convenience has insane value. You know what the hidden currency of investing really is? It's your time. Effortless, automated investing builds the exact kind of steady consistency you actually need to create lasting wealth. Plus, stocks are incredibly agile. Got a new job, moving, or hit an emergency? Your portfolio travels with you. Need cash fast? Stocks offer pure liquidity. You can easily sell off just a tiny slice if needed. But hey, here's the catch. Stocks are wonderfully simple, sure, but they are absolutely not stress-free. Market volatility is the real beast here. Sudden drops will absolutely test your stomach and your emotions. The hardest part isn't buying, it's having the sheer discipline to stay put when everyone else is panicking. So who thrives doing this? Anyone who loves simplicity, craves flexibility, and definitely doesn't want a second job. Choosing the simpler path doesn't mean thinking small. Over time, it can genuinely build you some extraordinary wealth. So, looking at the big picture, if you could only pick one path to wealth, which would it be? Today, we're diving straight into the ultimate wealth-building debate. So which investment actually takes the crown? Are we talking real estate or stocks? People argue about this literally all the time. Rental cash flow versus rising stock charts. But you know the real answer to this showdown? Well, it's neither, and it's both. Because honestly, the winner isn't about the asset class at all. It's totally up to the investor. It's about being consistent, soaking up knowledge, and actually sticking to the plan when things get rough. Seriously, a perfect strategy ditched after 6 months is basically useless compared to a simple 20-year plan. That's why this whole debate misses the mark. Real wealth is built through behavior, not perfectly timed predictions. Some folks build empires with real estate, others crush it with index funds, and many use both. The absolute most important thing isn't picking the perfect asset on day one. It's just getting started. Because over the years, time and consistent compounding do way more heavy lifting than you'd ever expect. Every single year you're just sitting on the sidelines is a year compounding literally can't help you. So, let me ask you this. If you magically had 50 grand to invest today, are you going all in on real estate or stocks? Drop your answer and your reasoning below. I love reading these because honestly, the absolute best lessons come from hearing different perspectives from you guys. If you like this explainer, hit subscribe. We don't chase the hype here, we just follow the math. Thanks for watching. And remember, the goal isn't winning some internet argument. It's about building true freedom. Dive right in and tackle the ultimate financial showdown. You know, the endless arguments, but which investment actually comes out on top? Is it the rock-solid security of real estate or the explosive growth of stocks? Well, here's a massive twist. The right answer is actually neither, and kind of both. See, the underlying asset doesn't dictate your success. Ultimately, the investor matters way more. The true winners, they stay incredibly consistent, keep learning, and just stick to the plan. A perfect strategy you quit in 6 months is literally useless compared to a simple, decades-long plan. People waste years arguing over charts, totally missing that wealth is built through behavior, not predictions. Some build absolute fortunes in property, others in index funds. The best often use both. So picking the absolute perfect asset matters far less than just taking that first step. Time does the heavy lifting, turning small, everyday actions into massive wealth over the years. But wait, around? Your compounding growth is literally zero. Time lost is absolutely money lost. So let's hear from you. If you had 50 grand to invest right now, would you choose to start your wealth journey with real estate or jump into stocks? Drop your answer in the comments. We learned so much just by sharing different perspectives. If this explainer helped, definitely subscribe. We completely ignore the hype here and follow the math. Thanks for watching. Always remember, arguing over which asset class is best totally misses the point. The real goal is freedom. So what specific habit will you change today to unlock yours?